Hi, this is Dave Ford, President and Founder of the Atlantic Gold and Silver Centre. Today is Wednesday the 26th of April 2017, and today we're going to look at why investing in precious metals is such a great idea if a lot of your assets are already in Canadian dollars. Now this is quite a timely video because we've seen a Canadian dollar drop to around 73 cents on the dollar compared to the US dollar this week, and if you have a look at this chart, the trend is pretty obvious. The price has been declining since parity in 2012, mostly due to falling oil prices since the Canadian dollar is seen as a petrocurrency. The only time it's been lower in recent history is the massive spike down below 70 cents late in 2015 and early 2016, and this was after the Liberals came to power and announced $25 billion in deficits. Now, deficits are never good for the strength of a currency. It means the country is going to go heavily into debt. On the right hand side of the chart, we see decreasing highs, which means we're approaching a significant breakdown in price, and we'll be back down to the slump below 70 cents very, very soon. Now, why is this happening? The Canadian dollar is seen as an oil producing country, which means that the strength of its economy is based on the oil price. The oil price has obviously fallen a lot in the last few years. Deficits, I already mentioned. Trudeau's insane plan has now exploded, not $25 billion in deficit. The government's own accounting office say it's going to be $120 billion over the next 5 years, with very little actual stimulus, just a lot of spending. Even the press have been turning against him and saying what a ridiculous plan this is. And the problem is, with all these deficits, is how are they going to be repaid? Now, in terms of taxation, Canada is almost, not quite, in the top 10 of taxing nations. Of all the money you earn, about 43% of it gets taxed in your lifetime, whether that's a combination of property tax, sales tax, income tax, and various other taxes and fees. The government will take about 43% of everything you earn. It's a lot, and the problem that means is that in order to repay its debts, the government can't really increase its taxes too much without a big outcry by the population. So the only other solution to pay off the deficits is for the economy to grow massively, which is very unlikely given the state of the world economy, or it's to inflate away the debt, to devalue the currency and hence devalue the debt. And this is probably the option that's going to be taken. So if you want to avoid poverty in the next few years, then you need to get out of the Canadian dollar. But the question is, where do you go instead? You've got three quick choices. You could go straight to US dollars, you could go to precious metals, or you can go and invest in real estate. There are other options, but those are probably the three big ones that people will look at. Now, I'm going to debunk real estate immediately. I know there's a real estate investors who watch this, and there is a lot of hot money from China flowing into Canada in Vancouver, more so than recently into Toronto, and some of it we're starting to see come out east as well. There's a lot of Chinese buyers around. So there is a possibility to make short-term gains in property, and if that's your thing, then great. But for most people, if you're holding property and the government needs money, what are they going to tax first? They're going to hit property taxes. We saw it recently in New Brunswick, huge hikes in property taxes because you can't go anywhere else. You can't move your property to another jurisdiction. You can't very quickly sell it. It's not a liquid asset. When governments put up property prices, then there's very little you can do about it. And so I would say that property is a marginal investment at best in this part of the world. The taxes eat up a huge amount of your profits, and a lot of properties and rental properties are barely break even. So that's, for me, that's why I don't think that investing in real estate is a great idea unless you really know what you're doing. Now the second one is the US dollar. If you watch Zero Hedge, there was an excellent article republished there from Grant Williams. It was called "The Death of the Petrodollar and What Comes After," and I'm going to put a link in the comments below. But basically, it was pointing out that many countries have moved away from the use of the dollar for exchange. Russia, China, Iran, some other southeastern countries as well have completely moved away from the dollar. The other big thing is that the countries that were previously buying heavily US treasuries and supporting US internationally, such as China and Saudi Arabia, have become net sellers of US treasuries. The world is soon going to be flooded with US debt notes, and people are not going to want them because there's just too many around. Now, oil producers in the world have noticed this, and oil producers may in the past have sold their oil on the market and bought US treasuries, like we said, but they're going to decide that they don't want something that's going to be abundant and going to go down in value, and they're deciding that they basically prefer gold. And oil is gradually being repriced in terms of gold, and that's why we're seeing the price go down. The gold price is being suppressed. So if you suppress the gold price and you're repricing oil in terms of gold, the gold price is going to be forced down. Now, the entire strength of the US dollar, the international strength, was based on its petrodollar status. The fact that the Saudis would only take US dollars for oil, and they would send those US dollars back to the US by investing in treasuries. That's no longer happening. The strength of the US dollar could really collapse internationally. So that leaves you with precious metals. Now, this is the asset class that everybody wants. It's a no-brainer. It's still the rarest, most difficult to produce money on earth. Its price is still being suppressed by the central banks, who are trying to keep a lid on the brewing crisis. And the fact that people around the world have not quite yet woken up to the fact that this is going to be the currency of the future. Because what's coming is going to be nothing short of financial Armageddon. And it's not going to be a gradual thing. It's going to be an explosion. It's going to be all over the news. There's going to be financial collapses in stock markets and currency markets across the world. The scale of the crisis is huge. The numbers are unimaginable, and the collapse will be earth-shattering. Which leaves the question, if you're not buying precious metals right now as an investment, why not? These are bargain prices. We see ups and downs of a few percent here and there, but in the long run it's not going to matter. If you're not actually buying precious metals, you're either ignorant of the problems that are out there, or you're just plain stupid. Prices have been very strong this year, and every time there's been an orchestrated smackdown, less and less damage has been done to the price, and it's always bounced up again pretty quickly. Now, we might see a pullback in the summer. We often see prices dwindle during the warmer weathers, but as events start to accelerate and people start selling US treasuries, there's going to become a tipping point, and at that point all bets are off. There's no telling how high and how fast precious metals will start to move. So please take time to read through Grant Williams's email. It's quite a lot of charts in it, and it's a little bit long, but it's worth a read, or watch the video presentation that's on the link there. Then go and buy some more precious metals, and you'll ultimately be glad you did. So thanks for watching, and we'll see you all again in a couple of weeks.